Welcome back, everybody. Welcome back to another episode. I'm going to start breaking down the basics for you, okay? So we're going to start this video off with what is market structure, all right? I'm going to go in full detail, explain to you exactly what market structure is, what it looks like, so it's just a little bit easier for you guys to read in live time when you guys are practicing, back testing your strategy or whatever the case may be, right? So what is market structure? Market structure consists of a bunch of highs and lows in the market, right? So what do highs and lows look like? They could look one of three ways, all right? So obviously in a bullish market, you'll see a bunch of higher highs and higher lows. So what does that mean, right? What does that mean? Every single high is going to be higher than the previous, and every low is going to be higher than the previous, right? So what does that easily indicate? That easily indicates that we are in a bullish market or a buying market, right? Another way that you'll see market structure form is in a bearish market, right? So what does a bearish market mean? It just means price is making lower lows and lower highs, right? So what does that look like? That looks like each high that is created is indeed lower than the previous, just like how these lows will be lower than their previous, right? So that is a clear indication of a bullish versus bearish market, all right, or a buy and sell market, all right? There also is one last form of market structure, and this is where it tricks out a lot of people because it's a whole lot of sideways motion, right? It's a whole lot of relative equal highs, relative equal lows, and it's pretty much just stuck in this zone, right? And that's where a lot of people try looking to force trades. They think they're seeing a fake breakout when in reality it's just caught in a zone and it's just ripping retail traders apart because they keep entering, they keep buying at the highs, keep selling at the lows, so on and so forth, and it's just stuck in this zone until it finally breaks out and continues or reverses, right? So what does this essentially look like in live time markets, right? So phase one, what you're gonna do is you're going to see a accumulation zone, right? What is an accumulation zone? This right here would be an accumulation zone, all right? So this is phase one, all right? So when you're looking at live time markets, what you're gonna look for is you're going to look for a state of accumulation, all right? What are you going to do after that accumulation is settled? You're going to wait for a manipulation leg either to the upside or to the downside, right? And then what you're going to do is you're going to look for phase three. Phase three would be your distribution zone, right? Your distribution zone is when the big hedge funders and big indices are hopping into their trades after manipulating retail traders into hopping in the opposite direction or the wrong way. And then they start making price move where they want it to go, wiping out a bunch of retail traders, whoever they were able to manipulate during this either accumulation zone or this manipulation zone prior to distributing either higher or lower, right? So I'm going to give you guys an example of what live time accumulation, manipulation, and distribution looks like, all right? Okay, so this is live data on MGC or micro gold futures, all right? So what's the first phase that we see? First phase is gonna be right here, accumulation, right? This will be your accumulation zone, right? And what do you notice about your accumulation zone? It is stuck in between this red rectangle, right? It's not making any lower lows below it. It's not making any higher highs above it. It's pretty much just stuck in this little range of price, right? What do you see next, right? You see phase two right here, which is your manipulation. Okay, and your manipulation is if you didn't get snatched up in this phase, in your accumulation phase, chances are if you're a new trader and you're brand new to the market and you don't really understand price action just yet, this is essentially where hedge funders, market makers look to trick you into getting into the charts, getting into trades going the opposite direction of where they originally want price to end up, right? This will end up breaking a bunch of stop losses, cutting a lot of losses out of the market, while the market makers and the big traders are collecting all of those sold orders at loss, right? And then pushing price up into the direction that they want to go, which is phase 3 distribution, right? Now, is it always going to look this pretty? No, but for the most part, it's going to look very similar, whether it's to the upside or to the downside. All right, the only difference that you will really notice, right, is if this were to go reversed, right? So if this manipulation was higher, what you would wait for is the confirmation of the distribution lower in order to hop into your trade, right? So how would you trade this type of market structure, right? So what you would do, you would be very patient. You'd be sitting on your hands during a phase of accumulation, and you would wait for this manipulation leg to form and then reverse, right? So what do we notice after this manipulation swings lower? It quickly rejects and bounces back up into this zone where we start seeing a bullish order flow flowing into the market, creating a bunch of bullish fair value gaps, a bunch of bullish imbalance, and price is running or over collecting all of these highs that were stacked over to the side here, right? So what you would do is you would wait for this manipulation leg to form and reverse, and you would wait for some sort of change of character, change in delivery of price action. What do I mean by change of delivery, right? I want to see one of these highs get taken and respected, right? So what do we see here, right? This high gets taken, retested, and respected, pushed back higher, right? You could have taken a trade in any one of these 3 candlesticks here for a nice risk to reward trade. Even if you took it at this open, you could have targeted any one of these highs for a quick 47 points, and it's a very easy market setup, right? It literally would have taken you a single 15-minute candle for that trade to form and develop and play and pay out in your favor, okay? So that is what you're gonna do when you're practicing looking at your charts. I want you to mark out your zones of accumulation, right? Put them in red, because we don't like trading in accumulation zones, right? We don't like this. This is a bunch of sideways price action. There's no guarantee of higher or downward movement, right? So we want to wait for everything to develop for us and wait for the market to give us a structure of worth taking, right? We want structure worth taking. This is our money at risk here. So why would you force a trade that's not there? Why would you force a setup that's not your model, right? So this is why it's very important to understand market structure, the way the market develops, the way the market moves throughout days on end, and the way these candlesticks print, right? The better you understand candlestick printing, the easier it will be for you to read these charts and actually mark out your charts properly, appropriately, and correctly, right? So then you could, in order, trade off of those marks on your chart and become a little bit more knowledgeable over time within your practice, right? So again, accumulation, I want you to mark out in red. In manipulation, I want to mark out blue, because we're still being patient in these manipulation zones or these manipulation phases. And then I want you to mark out your distribution in green, because this is where you want to look for quality setups, quality trades, and quality executions, all right? If you guys have any questions, please feel free to leave them in the comments for me. I would love to get back to every single one of you. If I didn't cover everything that you'd like me to cover, if there's something specific that I might have missed out, I don't think I missed anything out. I definitely covered all of the basics when it comes to easy market structure reading. It's struggle enough. It's a stressful experience enough trying to learn this on your own. So the way I'm going to be teaching you guys for the most part is dumbing it down, simplifying it, and making it as easy as possible for you guys to read, understand, and execute, so you guys could see progress in your journey early on. All right. I love you guys. Thank you all for the support. Until next time, peace.